Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, we're going to be covering a few news stories out of KPMG. There's a couple press releases that I've missed. First off, let's talk about a new tax data reader tool that KPMG released. They released a press release about this. And the press release says, as companies continue to struggle with synthesizing and understanding enormous amounts of data, especially financial data, and remaining tax compliant, KPMG announced it's granted a U.S. patent for its tax data reader innovation. And this tool rapidly extracts relevant information from lengthy tax reporting forms and seamlessly plugs it directly into tax returns, saving time and money while reducing human error. A timely innovation as the 2021 tax filing deadline approaches. And it says this data reader is especially useful for populating a Schedule K1, which is a partnership form. And this typically includes a cover page followed by hundreds of pages of footnotes. And it says that they can do this. They can prepare more than 300 K1 forms in less than 10 minutes, saving 80% in manual hours and resulting in 50% increase in productivity on higher value tasks for their people. And they say it is a game changer. I could have sworn the KPMG already had something like this. And it says that it uses natural language processing. All the big four accounting firms have something similar to this for partnerships, and they've all been pushing this out to their clients, trying to automate partnerships because partnership tax returns are extremely big. And it's because they have to give K1s to all of the investors. And the financial service clients have multiple funds with hundreds and thousands of investors, especially as you get further and further down the investing chain. So I'm not really sure what the difference is here. It just seems like they patented something, but I'm not really sure how this is different than the other big four. There's probably slight differences because the big four accounting firms all have these same tools and they all sell it to their clients. And I know clients aren't really too impressed with any of this stuff. And as you see, it's not really for federal compliance for corporations because federal compliance for corporations is pretty difficult. The forms are extremely complex and confusing, and you can't really pull information off of financial statements and populate it because there's so many minute details that the government wants in the United States. This is all related to the United States. And so I'm not sure what's really here. It's probably just adding to their partnership processing solutions that they have for technology purposes. But that's just something else to keep in mind. The big four accounting firms are continually focused on technology. And another press release that came out for KPMG, and this was a few weeks ago, is that KPMG entered into an agreement with the federal government to help accelerate access to monoclonal antibody treatments. And this relates to COVID-19 patients who are at risk for hospitalization or death from the coronavirus, with a focus on ensuring more equitable access to treatment. And again, this is in the United States. Anytime you hear the word equity or access, it has something to do with race. And it says this program will leverage innovative approaches to develop different prototypes for expanding MAB, which is an acronym for monoclonal antibody, infusion capacity in underserved communities across the country. And Paul Knopp, who's the US CEO, he's actually the person that spoke about this. And he said, KPMG is honored to support this important effort to increase access to monoclonal antibody therapies for COVID-19 patients. This effort potentially will have life-saving benefits for vulnerable patients in the communities we serve at a crucial time in this global pandemic. This is just
more evidence that governmental work during the COVID-19 crisis, and the more scares of health crises that are going to come out of this, that big four accounting firms are going to make a lot more money off of governments and government work, and not only government work, but also this racial stuff, the social equity. Big four accounting firms are going to play into this because it just means more governmental work, because not only are you getting work here related to COVID-19, it's also related to this equity and access stuff, which, I mean, you could put anything under that umbrella. You can say there's people aren't getting enough access, or there's not equity. How do you measure equity and access? It doesn't say the metrics in here either. So it'll be interesting to see how this pans out. But we also know the big four accounting firms have struggled with their government work that they've gotten. A lot of governments are really mad at them. State governments in the United States with unemployment benefits and other COVID-19 work. So we'll see how they do. I think it poses risk here for KPMG because they don't say what increased access and equity is, and if people in these minority groups, wherever KPMG is doing this, continue to die in disproportionate ways, then I think KPMG might get blamed for it. And it says that the reason KPMG was selected is because they can leverage their deep experience in strategic planning, project management, and data and analytics to help the federal government increase access to healthcare for vulnerable populations. But this isn't what KPMG specializes in, so they're not specialized in preventing people in minority groups from dying. So they might be specialized in planning some projects, but I'm not sure. I feel like there's a lot of risk here, but there's probably also a lot of money on the line. The government already probably has multiple contracts with KPMG, so it's easy just to give the work to KPMG or another consulting firm, but KPMG has the most people probably available, so that's probably why they're selected. And along these same lines, I wanted to talk about KPMG. They released their same time period a few weeks ago. They released their first diversity, equity, and inclusion transparency report. We previously talked about this with Deloitte and how Deloitte's aspirations in this area were a little bit crazy, but I didn't realize that KPMG did the exact same thing. And KPMG has a specific name for it. They have a strategy in their diversity and inclusion report that's called Accelerate 2025 Initiative, where the firm hopes to achieve the following goals: 50% partner and managing director representation from underrepresented groups, including doubling Black representation. They want 50% increase in Black, Hispanic / Latinx workforce, which, if you remember from that the Deloitte report, is exactly the same. And what the report found is that 66% of their partners and employees are white, with Asian being the next largest population, Hispanic being the next largest, but 66% were white, 18% Asian, 7% Hispanic, 6% Black, and then the rest are two or more races. And if you actually look at the report, you look at the gender part too, the vast majority of partners are males. And a lot of the diversity in KPMG is in the administrative professionals class. In the associate, senior associate, manager, senior manager, managing directors, partners, the majority of people are white, and the more senior the people get, the whiter they get. So again, I have the same outlook on here as I do with Deloitte. I don't think KPMG is going to get this done. It's too fast. It's only 4 years or less than 4 years now that they have to get this done. I don't think they're going to get it done. I think it's too... I'm not saying that they couldn't do it if they didn't invest before this year, but they're barely investing in this initiative now. I don't think they're going to get it done. And I'm going to try and highlight that in a future podcast of reports that the big four accounting firms have done in the past of how they said they're going to do this and then nothing happened. And so I'm stay tuned for that, because I plan to do that in a future episode of digging into these diversity measures and seeing how they don't stand true to what they say. not just that, it's a lot of the goals the big four accounting firms do. Like E&Y had this insane goal of $50 billion, and they were going to do that by 2020, and they didn't even come close to that. There's just, and there's other goals. Like they always have these insane goals, and it looks really good in a press release, but it's really hard for them to accomplish, especially since I don't think they really pay attention to it. But I plan to highlight that more in future episodes. So that's the podcast for today. Stay up to date. Make sure to subscribe to this podcast. If you can, support us financially through the Buy Me a Coffee link in the show notes of this podcast. And thanks for listening.